Hello, I'm Ben Jones. You're watching Dukascopy TV. It's Thursday, so of course it's time for another edition of Commodities Corner. So joining me on the line right now is Martin Jansson from Handelsbanken Capital Markets to discuss copper. Now, last month, Martin, copper prices took a steep drop because of concern of slowing demand from China. Now there's a surge in production, which could send the price even lower. Is this something you see happening? Will copper continue to fall?
One of the bears will wake up in spring, so to speak. Data has been weaker than expected on a broad front. The market has been shocked, and what remains now is the exciting resolution when the Chinese leaders should act and bring the ship safely ashore again. However, this year the outcome is much more risky than in 2012 and 13, as the Chinese leaders, Li and Xi, have promised reforms and less focus on the growth target. In combination with the anticipated supply storm, with a lot of greenfield projects going on stream during the next 3 or 4 years, I think prices are set to fall further under severe structural pressure.
Do you see demand from China continuing to slow down? And with China being 40% of the global copper market, what's the scenario if things do slow down further?
I think this is a natural part of the extractive industry's natural boom and bust pattern. But I don't think this is the end of the commodity. But it's perhaps the end of the beginning, as the Chinese demand moves into a more mature phase, demanding less of the early cycle commodities such as iron ore, steel and copper, simultaneously as demand is about to catch up. In the short perspective, I think we should keep an eye on Europe as well. Europe accounts for 20% of global copper demand and has had a positive PMI series since July last year.
And finally, copper's recently been affected by the interest rate discussion in the States. What effect would a rate hike in the US have on the copper market?
Well, I think we must make clear that since last year, commodity fundamentals have taken over after the years when the market was under the whip of the central banks. I don't expect too much action in commodities from what Fed are doing, except gold and silver. Or at least I expect less action in commodities than in other asset classes.
Martin, thank you very much for talking to us again today. That's it for Commodities Corner for this week, but we have plenty more updates and exclusive interviews for you, so stay tuned.